Pleasure to have you back on, my friend. Again, you nailed it. And I think that hopefully we helped a little bit because last week we introduced our viewers to the term gamma squeeze. We talked about sort of exactly what was going on and the mechanisms underneath the market. But when you posted the size, the volume of options activity, even I got nervous. What can you tell us about how much retail investors are really gambling?
Sure. Good morning. Yeah, historically, the average individual investor, especially one who's just sort of getting into the market, played stocks, bought individual shares, and increasingly they're shifting to options, which are potentially, not always, but potentially much riskier. They're also much more sophisticated kind of investment. Usually it's the pros who are sticking and focusing on options, but increasingly it's individual investors. It can be bigger investors as well. We've written about SoftBank, others have too. But I think the importance of our piece is that it's not just SoftBank. About 120% of all share purchases, you can get the equivalent of options. In other words, there's much more volume going on in the single stock option world, which is striking, and we've never seen it before.
Okay, a lot to unpack there, and that stat's the one that I sort of tweeted out tongue-in-cheek, as I am wont to do, by the way, Greg. I mean, first off, there have been the creation of weekly expiry single stock options. They existed. Options used to be only really monthly. Now there's a lot of weekly, so I imagine that plays into the volume. But I sort of half joked. I was like, Greg, you want to sell me a car? I'm going to pay you 1.2 times what you want for the car. I mean, theoretically, should the volume of options, which are based on the stocks, be more than the stocks? Because ultimately, there's not enough of the underlying asset to cover all the trades.
Yeah, you kind of saw that a little bit. I don't want to make any kind of direct comparison, but you saw that a little bit in the financial crisis where they had CDS contracts that were sold and the volume was much higher than the underlying. What's really important, I think, and you suggested it earlier, is when you get all the stock option trading, both buying and selling, the banks, the dealers that have to sell this stuff, they have to respond. And they do it often by buying even more of these shares. So if, let's say, you and I go and buy these options from a dealer, the dealer doesn't want to be caught short. They want to protect themselves. They want to hedge themselves. So they go and buy the underlying shares. And it really adds, we don't want to suggest that this is the only reason why the market's going higher, had been going higher and then fell, and now is going higher again. But it's a big part of it is this add-on effect by the dealers doing their own trading just to hedge themselves.
You don't have to say it, Greg. I will, because I've talked to a lot of traders that have said that's kind of the reason that many of these, not the only reason, but a big reason many of these big tech stocks continue to go up, because not only is everybody just buying the same stocks, not only are the ETFs just buying the same stocks, but now the options traders are playing the same stocks. And the dangerous thing about options, and I know you're going to say, okay, if I buy a stock from you, there's two people because you sell it to me, but options activity has somebody always active on the other side. It's not just a passive transaction. And as we found out last week, that can go poorly really quickly.
Well, what's really interesting is if you're an individual investor, you're getting involved in the market, you're starting to play options. And I've got two young sons, who've done a little bit of dabbling to their father's dismay, myself. You're going up against some of the big boys, the Citadels of the world, the Renaissance Technologies. Those guys are sophisticated investors, often on the other side of these transactions. It's not to say that the individuals can't win out. And frankly, they've done pretty well on some of these big tech stocks, tech and others as well, including Tesla.
So wait, well, hold on. You buried, Greg, you're a great journalist, but you buried the lead. Okay, you just finished a book on Jim Simons, the man who solved the market. By the way, I urge everybody to read that about high-speed trading. You're writing this article, and your own children are the problem. They're contributing to the volatility. When you sit around the table and you say, don't do it, what do they say?
They listen to their peers a little bit more than their father at this age. And, frankly,
you too.
I look at it as sort of an inexpensive lesson to some extent. And if they make money, fine. And we're not talking a lot of money. They're not losing a lot either. But it's a lesson. And let's see. And frankly, they're already getting a little bit concerned. One of the reasons they got concerned about trading is I informed them there actually are taxes that one needs to pay if one makes money trading stocks, which just kind of floored them. So there's an education process going on in the Zuckerman home.